Markets have staged a strong rebound after frontline indices Nifty 50 and S&P BSE Sensex hit bottom on March 7th, with benchmarks recovering 10% since March 7th. What has changed in the past 3 weeks? The Ukraine war, which led to dampening of investor sentiment, has still not reached a peaceful resolution. However, US President Joe Biden's largest ever release from the US Strategic Petroleum Reserve has calmed the oil markets from the multi-year highs. Lower crude prices coupled with Russia's offer of discounted crude oil prices at $35 a barrel to India are insulating the markets from the worst. Apart from that, analysts see in line fourth quarter earnings for FY22 help retreat investor sentiment.
Strategic release of crude oil from US, offer of discounted prices for supply of crude oil from Russia to India, and for the forthcoming Q4 numbers starting possibly second week of April. I think these are some of the, and of course lower crude oil prices than what they were about a week, 10 days back. I think this is what is adding to the sentiments. Expectation is that the Q4 earnings will be in line with expectation and hence you are seeing some amount of recovery. But to say clearly that we are out of the woods, I would not say so. There are concerns, and only time will tell how these concerns are answered in terms of wisdom prevailing over missiles and bullets as far as the geopolitical situation is concerned.
Large part of the sell-off in India was driven by massive FII selling since October last year. However, analysts believe that the worst FII outflows have peaked for Indian markets. Neeraj Chhadawar of Axis Securities, for instance, expects FII inflows to resume in the next 2 months as valuations seem favorable. Listen in.
So our DIIs are much mature at this level, and the flows in the domestic mutual fund and from the retail side is very robust. Short term, the FII flow is likely to be volatile because it was historically seen in the 2015 rate hike cycle. Just before the rate hike, the volatility was very high in the market, and FII was selling not only India but from the emerging market basket. But in 2015 cycle, once the rate hike cycle started, then the phenomena of growth, the phenomena of fiscal deficit will come in, and the phenomena of fundamentals like earnings visibility will come in. We believe that for next 1 or 2 months, due to the rising geopolitical uncertainty, rising oil prices, inflation is a risk, and to combat that, the Fed has already come up with a trajectory for 2022. For up to some extent, that trajectory is clear. We believe that in next 1 or 2 months, FII flow will likely to moderate, which already started from last 1 week, and with more stability in the global market, volatility likely to reduce in second half, and then after the fundamental play will likely to kick in. We believe in the India story that is intact. Our Indian economy likely to be a fastest growing economy in the entire emerging market basket, and the fiscal deficit is already in a moderating phase. All these scenario will come in play, and earning expectation from the Indian market is remain intact. We expect 20% earning CAGR from FY24 from FY21. In the Nifty front, that aspect is remain intact. Short term, it could be volatile because there is a big macro risk is there. But we believe that in second half, they likely to come back, and based on the fundamentals which India hold.
To sum it up, panic among investors seems to be easing, but markets may not be completely out of the woods. The near to medium term sentiment will continue to remain volatile as the Ukraine-Russia crisis is yet to reach a definite solution, and supply shortage-induced inflation is yet to peak. That said, this week's market trajectory will be guided by a host of domestic and global economic data points. India will release its manufacturing PMI data for March on April 4th and services PMI on April 6th. Globally, Eurozone, UK, USA and Russia will roll out their respective composite and services PMI data for March on April 5th. Moreover, Eurozone's retail sales for March are due to be released on April 7th, and Russia's Quarter 4th FY22 GDP data will be released on April 8th. Lastly, the Reserve Bank of India will announce its interest rate decision on April 8th. Shivam Bajaj of Avener Capital believes that the central bank will maintain the status quo and focus on growth at the upcoming Monetary Policy Committee meeting.
Central banks globally have embarked upon raising interest rates to curb inflationary pressures. India so far has maintained a more accommodative policy. Retail inflation in India in February 2022 rose to an 8 months high of 6.07%, which is outside the RBI's target range of 4 to 6%. In the last MPC, RBI attributed high inflation largely due to supply side pressures. Tightening of monetary policy can assist in curbing demand, not augmenting supply. While the geopolitical tensions continue, the US has announced a massive release of the country's strategic oil reserves, and Russia has offered crude oil to India at a big discount. The RBI, in my opinion, is likely to keep its focus towards growth and maintain status quo.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.